The US dollar has reigned supreme for decades. Since World War II, it's been the world's leading reserve currency. This means countries hold most of their foreign exchange reserves in US dollars. They use it for international transactions like buying oil or other commodities. This dominance gives the US significant economic and political leverage. It can impose sanctions, influence global trade, and even borrow money more easily. But the world is changing. The rise of emerging economies like China and the increasing use of alternative currencies challenge the dollar's status. This shift is what we call de-dollarization. De-dollarization is a process. Countries decrease their reliance on the US dollar. They use other currencies for trade and financial transactions. This shift can happen gradually or rapidly, depending on global events and economic factors. De-dollarization matters for several reasons. For the US, it could mean less economic influence and potentially higher borrowing costs. For other countries, it's a way to reduce their dependence on the US and hedge against risks associated with a single dominant currency. The implications of de-dollarization are far-reaching, impacting global trade, finance, and geopolitics. The relationship between oil and the US dollar is deeply intertwined. Oil, the world's most important commodity, is priced in US dollars. This is known as the petrodollar system. This system benefits the US by creating constant demand for dollars. Countries need dollars to buy oil, supporting the dollar's value. However, this system is under pressure. Some oil-producing countries are exploring alternatives to the petrodollar. They are considering accepting other currencies for oil, which could weaken the dollar's dominance. De-dollarization has significant geopolitical implications. As countries move away from the dollar, it challenges the US global standing. It reduces its ability to influence international affairs through economic means. This shift could lead to a more multipolar world. Power is distributed more evenly among different countries and blocs. This transition could bring both opportunities and challenges. It could foster cooperation or exacerbate existing tensions. The geopolitical implications of de-dollarization will unfold in the coming years. Section 5. The impact on the US economy, inflation, interest rates, and more. De-dollarization could significantly impact the US economy. As demand for dollars decreases, it could lead to inflation. The cost of imported goods could rise, impacting American consumers. Furthermore, the US might face higher interest rates. It might be more costly for the government to borrow money. This could impact economic growth and government spending. However, the exact impact is difficult to predict and depends on the pace and extent of de-dollarization. Section 6. Navigating a multipolar currency world. Strategies for American traders. For American traders, a multipolar currency world presents both challenges and opportunities. Volatility in currency markets is likely to increase. It's crucial to adapt and develop new strategies. One key strategy is diversification. Traders should consider diversifying their portfolios beyond dollar-denominated assets. They can invest in other currencies, commodities, and foreign markets. Hedging strategies are also crucial. These strategies can mitigate risks associated with currency fluctuations. Traders can use instruments like futures contracts and options. Section 7. Real-world examples of de-dollarization in action. De-dollarization is not just a theoretical concept, it's already happening. Several countries are taking steps to reduce their reliance on the US dollar. China, for example, is promoting the use of its currency, the yuan, in international trade. It has established currency swap lines with other countries. This allows them to bypass the dollar in bilateral transactions. Russia has also been reducing its dollar holdings and opting for other currencies such as the euro and the yuan. These examples highlight the ongoing shift away from the dollar. Section 8. Practical advice for retail investors. Diversification and hedging in uncertain times. For retail investors, navigating a world with a less dominant US dollar requires a degree of caution and adaptation. Diversification is key. Don't put all your eggs in one basket, especially one denominated in US dollars. Consider investing in a mix of assets. These can include foreign stocks, bonds, and real estate. These investments act as a hedge against potential declines in the dollar's value. Consulting with a financial advisor can provide personalized guidance based on individual financial goals and risk tolerance. Section 9. Conclusion. The future of the dollar in a changing world. The future of the US dollar as the world's leading reserve currency is uncertain. While it's unlikely to disappear overnight, its dominance is being challenged. De-dollarization is a trend likely to continue. The speed and extent of this shift will depend on various factors. These factors include geopolitical developments, economic policies, and technological advancements. The world is moving towards a more multipolar currency system. It's essential to understand the implications of this shift and adapt accordingly.